And I have a feeling you're going to like the name of this person because their name is also Glenn, but it's two N's.
So it's spelled wrong.
And they're in Tennessee. So,
Okay.
So the question is, how do I know if I'm putting the right assets in the right accounts? Or in the right account?
Yeah, there's a million ways we could talk about that. So I'm gonna take a single lane because this could be an hour conversation. So I'm gonna approach this from a tax standpoint.
Okay.
So from a tax standpoint, if you have let's say you have $2 million, and $1 million of it is in an IRA, and $1 million of it's in a brokerage account. In other words, a taxable account. All things equal, let's say you're retired or near retirement, I would shift more of your fixed income into the IRAs, right?
Why?
Great point, because most of your fixed income is going to be taxed at ordinary income. Now, there might be a listener that says, well, what happens if I have a municipal bond where it's tax-free? Most of them are. Then obviously, yes, you would put that on a brokerage. But in this environment, most of my career, for most clients, it's going to be much more attractive to have corporate bonds, meaning Coca-Cola, Walmart type bonds, because you can get a higher yield, pay the taxes, and you still net more than you would in a muni bond. You need to do the math. It's not like that 100% of the time, but frequently it has been our experience. So what I would do is I would put the investments that spit out in gains or income that's taxed at your income level. I would tend to shift more of that money in your IRAs. Why? Because when you take out money out of if it's a traditional IRA, you're going to pay income tax no matter what, right? If it's a Roth, okay, it's tax-free no matter what. But either point, either case, what is the highest, most likely the highest product or investment capital gain or dividend or income that you're going to pay? Most likely it's going to be from your fixed income. So I'd put that in your IRAs or Roths, basically your qualified accounts. And I would lean more of your stocks where you're going to get your qualified dividends come from, which for most people it's going to be less than their income bracket. You're also going to have your long-term capital gains. And lastly, you're going to get your stepped-up cost basis, right? So if I have, let's say I put in $10,000 in Apple 20 years ago, and now it's worth a couple $100K. When I pass away in that taxable account, there's a stepped-up cost basis. So now my cost basis is $200K, and my children do not pay a capital gain on the difference of what I paid it and not paid it. You get that benefit in a brokerage account, right? Had I done that same investment in an Apple in an IRA or a Roth, there's no stepped-up cost basis. I'm just going to pay income tax when I withdraw those funds.
And if I could add, I would probably say also it's important, and we did a podcast on this, to do a financial plan and have different buckets, have that traditional IRA, the Roth, the brokerage accounts. And, of course, that's going to depend on age, where somebody's at when they want to retire. But it's important, you just said, it's important to do the math and understand where those assets are coming from and have a financial advisor that's savvy enough to understand current tax laws and where your assets are to minimize taxes in retirement.
Yep, 100%. Yeah. To reiterate that, the advice I just gave, I think, is going to apply 95% of people. Mm-hmm. There's always going to be exceptions, which, to your point, that's why you want to do the financial plan, to let it crunch the numbers and see what's going to net you the most amount of money. But in most cases, I think it's going to be what we just discussed.
Well, awesome, Glenn. Again, thank you. And I want to thank the other Glenn for sending in the question. As a reminder, if you do have any questions, feel free to tag us or put it in the comments section of the videos or send it to gds@gdswealth.com. Thank you for tuning in today. And, Glenn, I really appreciate it.
Thank you.
Absolutely.